Can you deduct gambling losses? It depends on whether you itemize. Let's walk through it. Gambling losses are only deductible if you itemize on Schedule A, meaning your total deductible expenses have to exceed your standard deduction. If they don't, the standard deduction wins and your gambling losses give you no tax benefit at all. The standard deduction is a flat amount based on your filing status, whether you are filing as single, married filing jointly, or head of household, and adjusts slightly each year for inflation. On top of that, taxpayers who are 65 or older or blind qualify for an additional standard deduction. So your effective standard deduction could have two layers: the base amount and the age or blindness addition. The standard deduction amount factors into whether itemizing your gambling losses is actually worth it. In any tax software, you can enter all your itemized deduction expenses and let the software calculate which deduction is better, the standard or itemized. To find the itemized deduction section, go to the Federal section and then Deductions. In TaxSlayer, it is clearly listed as itemized deductions. Click Begin to see all the possible expenses that can be deducted on Schedule A. Go through all the ones that apply to you and your family. I am going to enter some out-of-pocket medical expenses that Luca paid in 2025, such as doctor visits and prescriptions. Note that the medical expenses on Schedule A are limited to anything above 7.5% of your AGI. So for many people, it is a threshold they rarely beat. We will enter them anyway and let the software calculate what's better for us. The next thing you want to enter is any mortgage interest you paid, which you would have received on Tax Form 1098. You can also search for that form in the tax software. The interest you can deduct is only on a loan used to purchase, build, or improve your main or second home. Enter the lender's name and loan information. One item that may often be listed on 1098 is real estate taxes, and many tax software programs will have a separate entry option for that. Pay attention, if you already entered real estate taxes in the 1098 mortgage section, that same amount can also appear under taxes paid in the itemized deduction section. Do not enter it twice. Now, when I go to the taxes you paid section, I can see that the $5,500 in real estate taxes I already entered on the 1098 is already listed here. So I will not enter it again. Any state and local income taxes you enter on your W-2, 1099, or W-2G will also be listed here already. So don't double enter them either. If you live in a state without income tax, you may want to enter your sales tax information so the software can calculate that deduction for you. For most people in states where you pay state income tax, the income tax deduction is usually higher, and you can only use one or the other. The tax software will calculate which is better for you if you enter them both. Another common item on Schedule A is gifts and donations to charities. I will enter some cash donations that Luca made during the year. Finally, to deduct gambling losses, go to Other Itemized Deductions. Note that under the Gambling Losses box, losses cannot exceed your winnings reported on W-2G, which in Luca's case is $10,000. Also, do not enter losses here if you already entered them with the W-2G income, which we did. I am going to enter the $15,000 of losses anyway, which is more than the $10,000 in winnings, and also a double entry since I already entered the losses on the W-2G. I want to test whether the tax software catches this and avoids error on my return. Now let's preview the itemized deductions on Schedule A for tax year 2025. Notice at the top that none of the $2,900 in medical expenses are deductible, because Luca's AGI of $93,000 means deductible medical expenses would have to exceed his 7.5% of AGI, which is $6,975. Taxes paid are listed on lines 5 through 7 and total $10,000. Mortgage interest is listed on lines 8 and 10 of $4,300. Charitable donations are listed on line 11 of $1,450. And Luca's gambling losses are listed as $10,000 on line 16 of Schedule A. Two important things about this line. One, even though we entered it twice, once with the W-2G tax form and once as an itemized deduction, the software only listed the $10,000. TaxSlayer recognized the double entry mistake. Additionally, in the TaxSlayer, even though we enter $15,000 in losses, it only allowed losses up to the amount of winnings. That is a good tax software behavior. However, not every software has these checks. So you should never double enter the same expense twice and never enter more than the allowed amount, which is up to your winnings for tax year 2025 and before. So Luca's total itemized deductions on $25,750 on line 17, which is $10,000 more than his standard deduction. Before I review the 1040, I will remove the double entry for the gambling losses. You do not want to receive an IRS letter or notice if you deduct the same thing twice. So now the gambling losses are only entered with the W-2G winnings tax form. Now when I look at my 1040, I can see the gambling winnings from Schedule 1 on line 8. But now the itemized deduction is $25,750, which reduces Luca's taxable income, and he gets a small refund of $185 instead of owing $2,015 when he used the standard deduction. With the itemized deduction, Luca's effective tax rate drops back down from 15.42% to 14.45%. The same rate he would have had if he never had gambling income at all. In this case, itemizing essentially wiped out the tax impact of his winnings. However, if you do itemize, you need to keep records to support all your deductions in case the IRS requests them. For gambling losses specifically, that means receipts for all bets and wagers with dates, locations, and amounts. A really useful tool I found is the Standard versus Itemized Deduction Calculator on the National Tax Tools website. You can easily enter your information to find out which deduction would be better for you without having to enter everything into tax software. Now, we talked about being able to deduct 100% of gambling losses on Schedule A if you itemize, but that was true for tax year 2025 and earlier. So if you still need to file your 2025 return or amend a prior year return, the 100% rule still applies. However, for tax year 2026 and forward, under the One Big Beautiful Bill Act, only 90% of your gambling losses are deductible, even if you itemize. The 90% is still capped at the amount of your winnings. So a break-even gambler would be taxed on the 10% of their winnings regardless. And that 10% does not carry forward and cannot offset other income. You will pay tax on it even if you itemize. The winnings amount is the overall cap. So first you calculate 90% of your losses, then you cap the result at the amount of your winnings. Let's go over some real examples. Example 1. A gambler has $10,000 in both winnings and losses in 2026. He can only deduct 90%, which is $9,000, of his losses if he itemizes on Schedule A. $1,000 will still be taxable even though he broke even. Because of the new 2026 tax rules, be prepared to set aside money to cover gambling income taxes. Now let's look at example 2. It's the same scenario but for tax year 2025. In that case, the taxpayer can deduct the entire $10,000 on Schedule A. Now let's take a look at the third example. A gambler in 2026 won $10,000 but had $20,000 in losses. First, 90% of $20,000 is $18,000. But that has to be capped at the winning amount of $10,000. So the gambler can deduct $10,000 on Schedule A. They cannot carry forward the remaining $8,000 in deduction as losses, nor can they use them to offset any other income. Thanks so much for watching.